Good morning, everybody. Happy Tuesday. How are you guys doing today? Good to see you all in here. Hope you guys had a great weekend and a great day yesterday. We have a lot to cover today. Hopefully, most of you saw the poll that we sent out. You guys all should have gotten an email this morning with the poll that we sent out, or if you do follow us on Twitter at the Elite Trade or Jeff or Mines, you would have seen the poll there. But we want your guys' feedback. You know, so many times we do these 90-minute sessions and you guys send in great input. So we wanted to start incorporating that. So if you haven't taken our poll, definitely do that. That's going to be right here pinned at the top of our profiles. So you'll see based on some of the feedback that we've gotten before, we incorporated into some of the choices that we already had. So some of the choices, staying in trades longer, that's been a popular one that's been requested. Fibonacci Elliott wave also has been very popular. Getting in and out of trades is another one that we've seen a lot of you guys requesting. And then the top one too, just your choice. You know, we still want to incorporate your feedback and see what you guys are thinking. So if you want to select that one, make sure that you type in your response below. If you don't have Twitter, no problem, just respond to the email, or I believe we've been posting it on Facebook as well. So just want to get your feedback on that. We have, I believe it goes till Friday afternoon once the results are going to come out. And then at that point, we'll start scheduling out these 90-minute sessions for you guys. So thank you for taking them. Also, just for you guys, we haven't mentioned it, but you can take each of the polls. So there's one on the Elite Trades Twitter page. There's also one on my Twitter as well as Jeff's. So if you do have a passion for a certain topic, feel free to put up to 3 votes in. Really looking forward to that. And again, that will come out by the end of the week. All right, so jumping right into it. Let's see, looking at copper. We'll take a look at copper too. Morning, Summer. So pre-market routine, the one thing I noticed just as I was going through it is a little bit more on the bearish side. However, when we go back to trend, we see more trending to the upside. Again, I always like to look for those impulse and corrective moves in the market, anticipating this could just be a corrective move before the markets continue higher. So Yahoo Finance, I took a look over here. Just want to look at the main articles. We can see stock futures dip pointing to lower open following tech rally. When I saw that stock futures dip pointing to lower open, seeing that as more portraying a little bit more on the bearish side. But again, we know how to read the charts. So ultimately, that's how we're going to dictate where those high probability buy and sell opportunities are at. I take a look at market watch as well. The main thing was just seeing Yahoo Finance a little bit more on the bearish side and taking that into consideration. Going over to Econo Day. So a little bit later today, we do have a few Fed chairmen speaking. So the importance of this is that once they speak or they are speaking, that can cause some volatility in the market. So want to be prepared for those times. That's going to be at 10 a.m. Eastern time. Also the 10 o'clock reversal. We have 11:05 a.m. Eastern and 2 p.m. Eastern time. And then the only other report coming out later today is going to be the ISM Services Index. So a few reports that we want to keep an eye on, as well as Fed chairman speaking. All of these different things are going to cause volatility and price fluctuations in the markets. Jumping over to the trend. So right now it is low. Typically what I'm looking for with this is that if the markets do get a pullback and we see the trend start to move higher, I'm going to be looking for where we have our buying territories at or potential breakout trade opportunities. Right now, we're not really getting a strong pullback, just a little bit, but something that we want to keep an eye on throughout the trading session. Now, jumping right into it. So have you guys taken a look at the charts? Are we going to be having a more favorable trending day, or is it going to be a choppier, more volatile day? What do you guys think as far as market conditions based on the pre-market routine? Are we more favorable, more trending, or more choppy, volatile? Ed's got it. Yep, trending, exactly. So we did break the prior session's high. I'm going to zoom in. So I have a lot of buying territories. But again, as we have these strong moves, as you can see on my chart to the upside, we form these buy territories on the way up. So that's where we're looking for those corrective moves to come back down into our buy territories. Great job, Chris. Yeah, so broke the prior session's high here. Again, just want to, illustrate what I like to look at when I view the charts and understanding, trend and just where those high probability opportunities are to get in. So we can see we've had these impulse moves on the daily chart. And then for 1 day, 2 days, a few days, price pulls back, continues to rally, pulls back. We've had this next rally and then pull back. That's where I'm anticipating that if the trend is going to continue higher, this could then be the next impulse move to the upside. We do have some selling territories in the way that we do want to keep an eye on, especially the high volume ones. But overall, we do want to be trading with the trend to stack the odds in our favor. I'll jump down to a 15-minute time frame just to get more of that detail and explain some of the different odds enhancers with each of our buy and sell territories that we have set up. So sell territory up here, we can see this one, let me zoom in, at the origin of this move down is going to be at 45.82 with our stop at 45.87.25. I'm on the 15-minute time frame now, but if you drop down to the 8-minute, you should see the leg base group of candles. I would say just cautioning, this one a little bit more since we don't have the evidence of the 3 touches, going to be more of a pivot points. And then also looking down here, how I'm always looking at volume, we can see that this one was created on lower volume. So this one less favorable. Also remember with the trend being to the upside, this could be a spot where a lot of novice traders trying to take a short trade opportunity, and we could see a short squeeze to the upside. But still want to mark that just as a potential area where price could get a pullback. Yeah, Agnes, there's below 45.70, 45.70 right in here. Looks like it might have tapped it. Yeah, so the 3 touches we can see we went to a smaller time frame or zoomed in because we're on the 15-minute. We can see the 3 touches here. Just looks like price came up and tested. It's one of the things we talked about in mastering the charts, those wick over wick areas. You can see price came back up, tested it, and came back down. So now we have this group of candles up here, but what I would just want to see more evidence right below it of the 3 touches. But absolutely right. We can see 1, 2, 3, pull back, just being cautious again with some of the other odds enhancers like the trend and not picking necessarily a top because we could see those short squeezes to the upside. Last pivot, exactly, Agnes. Yep, so we can see 1, 2, 3, we made a higher high and then price broke lower. Perfect. So buy territories, a little bit where I'm looking at just finding ones on higher volume in the ideal locations to be trading more with the trend. We can see we have this one up here at 45.56.75 with our stop at 45.50.75. I'm going to zoom in more to this one. There we go. So 45.56.75 with our stop at 45.50.75. What I'm looking at a little bit more, so this one is on high volume. This one is too. Notice also the location of the lower one though. So when we're talking about the 3 touches, support and resistance, we can see that the lower one may be in a potential better location. We're looking to the left again. We can see evidence of where price hit resistance once, twice, 3 times before breaking out to the upside. So this one, the 3-minute one, also on high volume and a little bit better of a location. That one's going to be at 45.42 with our stop at 45.32.75. And then one down here, we can also see higher volume, but this one's going to be a little bit more of a pivot point. Again, always looking for, we have the 3 touches of support and resistance. So this one where we have the 3 touches and then the breakout going to be targeting this area right in here. So that's the S&P. Again, this one just being a little bit more cautious of because of lower volume, and also with the trend being to the upside, since we talked about that first on the daily chart, we could just be seeing this as another corrective move before another impulse move back to the upside. Jumping over to the Nasdaq, pretty similar picture across the board with all these equity index futures. We're even seeing this strong move to the upside. And then on the smaller time frames where we have impulse moves, corrective move, impulse, corrective, and then here was another impulse move, potential corrective back into our buy territory, and now potentially another impulse move and potential short squeeze to the upside. We also are an outside day, so we can see the prior session's high is going to be marked with this top blue line here. And just zooming in, since I have a lot of buy and sell territories on here, we can see we did break above the prior session's high. So once we break that high, at that point, we're looking for more of those trending opportunities to the upside, in conjunction with the fact that the overall trend is to the upside as well. So I'm going to drop down to the 15-minute time frame. So we're approaching this buy territory right here on the 4-minute time frame, looking at 15,095, or actually we'll say 15,096, with our stop at 15,067.5. I'm gonna actually drop down to a 5-minute just to get more of that detail. Going over to the left, we can see this was an area where price hit resistance 1, 2, 3 times. We pulled back and then had that breakout move to the upside. That one had to go all the way down to a 4-minute time frame to get the leg base. Again, that one we're looking at 15,095, or sorry, 15,096. With our stop at 15,067.5. This one, so we can see location check, we can see volume check. I'll just say with the markets pulling back right now, and we're still, looks like 18 minutes till the market open, we can expect a lot of that volatility to come into play. I'm going to wait on this one until the market opens to see where that shuffle comes into play. And then always looking at what are the stocks doing? Are they moving in favor of where we're looking for our futures trade setups, as well as time of day? Are we hitting that quarter hour, 10 o'clock reversal? Personally, I like using some of those other odds enhancers to stack in my favor before placing some of these trade setups. And then a larger one right below that on an 8-minute time frame. So you may be able to go down to reduce it. You can also see where we saw a higher volume here. This is where price consolidated before moving up. This one's going to be at 15,061.5. With our stop at 15,007.5. And then also one we can see right at the session open where we had this huge volume spike and this huge move to the upside. We also had one down here at 14,895. So a few of them to keep an eye on. We always just want to look at, again, the different odds enhancers. Is location in our favor? We can see this one hit resistance 3 times before breaking out. This one may need to go to a smaller time frame to see the 3 touches, and then this one as well. Sell territory here as well, so we can see a group of candles is present. However, when we're looking at the volume, again, this one was formed in the overnight session. So a little bit lower volume means less institutional activity involved, and it may be a little bit more elevated risk. Again, with it, the trend being to the upside, this may be a good profit target, but not necessarily a place to take a short trade and expect the markets to continue to move lower. Jumping over to the Russell. So again, similarly, we broke that prior session's high on the daily chart. So looking for ways to potentially get in long, breakout trades to the upside, or pullbacks into our buy territories. There's been a little bit more congestion on the Russell, where we saw with the S&P and the Nasdaq, more of a larger move to the upside. So those corrective moves are a little bit easier to see. This one, just be a little bit more cautious with the chopping sideways on the Russell versus S&P, Nasdaq, and I believe the Dow as well may be a little bit cleaner to trade. So 15-minute chart. Yeah, just very choppy, even on the 15 minutes. I'm trying to look for buy and sell opportunities, but we really want the picture to be what we talk about and illustrate day to day. So we can see, a lot of chopping, a lot of sideways action. It's going to be harder to find quality buy and sell opportunities where there's unfilled orders within that range. So I went just outside of it to find this 4-minute buy territory. We can see also on higher volume during the regular trading hours. This one's going to be at 2067.1 with our stop at 2064.2. Again, if the picture doesn't look right, don't try to force it and make it seem like the right picture if it's not very clear to see. So, a lot of this choppy action, again, we don't want to be necessarily trading within it. We want to go outside and look for where the picture is a little bit cleaner. That one, again, looking at 2067.1 with our stop at 2064.2. Even just taking a step out now so we can see that, price is just hitting this resistance several times right in this area. Price has been using up a lot of these sell tickets in this area here. Just marking that with the pink box, we can see a lot of these sell tickets have been used once, twice, 3, 4, 5 times. At the point when there's no more sell tickets and price moves higher, going to be looking at this sell territory over here. Really like the picture on this sell territory. It's a little bit further away, but if you are keeping an eye on the market action after our sessions, keep an eye on this one. So we can see, looking below it, we can see evidence of 1, 2, 3, 4 touches, breakout to the downside, and also higher volume on this one. This one I'm going to be keeping an eye on just because it has a lot of those odds enhancers that we're looking for, versus trying to trade this area where price is chopping sideways. It's going to be a little bit more challenging. And then going over to the Dow, so again, broke out to the upside, looking for this to be a potential pullback into a buy territory, or we could look for a breakout to the upside. But overall, we can see here was our impulse move. Then price pulled back. We had another impulse move into our sell territory up here. Price pulled back, so potential corrective move, and then looking for that next impulse move to the upside. So 15-minute time frame. You can see similar picture, I believe, with the S&P or the Nasdaq, where we can see we do have the 3 touches, 1, 2, 3, 4 here. But then again, this being more of a pivot point, also formed in the overnight session, is just going to be a little bit more elevated risk for this one. Trading with the trend, looking for those pullback moves. We have a 2-minute buying territory at 34,701 with our stop at 34,649. Again, 34,701 with our stop at 34,649. We can see higher volume. We had a strong move out of there. And then sell territory. So we have this one. This one's going to be a little bit further away. The one that's a little bit higher up, we're going to be looking at, actually can make it smaller on the 15 minutes. So let me reduce this one Had it at the 10-minute, but we can see now I'm on the 15-minute, can actually sometimes make your buy and sell territories smaller when you go up in time frame. So leg base group of candles right in there. Also looking down at volume, high volume, so check for that one. That one we're going to be looking at 34,993 with our stop at 35,053. It's the origin of that strong move to the downside. And for any of you who look at, the round numbers as additional odds enhancers, like those 34,000, 35,000, sometimes those round numbers are additional odds enhancers. We can see that this one was right at 35,000. So potentially, a round number, it could be another odds enhancer for some unfilled orders. Going over to the equity indexes, just looking for those correlations. If they're all correlated, it's going to be a little bit more favorable trading environment. We can see S&P getting a pullback, Nasdaq as well, Russell moving higher, and Dow is going sideways. I'd say these three look more similar, the S&P, the Nasdaq, and the Dow, kind of more pulling to the downside, but relatively sideways. And then the Russell seems to be the only one that's moving to the upside now. So slight correlation, I would want to see a little bit more, trending to the downside or to the upside, just as an additional odds enhancer. And then looking at bonds, so if all the equity indexes are moving in one direction, we're looking for bonds down here to be moving in the opposite direction. You see bonds moving up. So if the equity indexes do push lower, bonds moving higher, that's going to be another odds enhancer for us. And then going to the internals, so we'll take a look at, again, the trend is very low, but we're also not seeing a huge move to the downside yet. If we take a look at the charts and the markets do start to pull back even more and the trend starts to move higher, that's when we're going to be timing our buy opportunities, our buy territories, or breakouts to the upside. Right now, trend is low. Oftentimes we say when trend is low, time to go. So just keep an eye on this one as well. Also look at the tick, advancing issues and declining issues, looking for those extreme points and for price to intercept with our buy and sell opportunities. And then VIX as well. If the market continues to move higher with the trend, we can see the VIX is going to continue to move to the downside as there's going to be less fear in the markets. And then lastly, I believe Jeff mentioned this before, the pre-market indicator looking good. We can see a huge gap up in the pre-market. So with the pre-market indicator, just looking for those gap ups or gap downs to see if there's more upticks and up volume in the pre-market. So in this case, we can see gap up, going to be more upticks and up volume, typically a little bit more bullish sentiment. This is just one of the odds enhancers we use in addition to all the other odds enhancers like the trend, different indicators we want to keep an eye on to look for what side of the trade that we want to be on. Go back to the S&P. We'll keep an eye on some of our buy and sell opportunities, price approaching our sell territories, just being cautious due to the fact that they're overnight session sell territories, and then waiting for price to pull back into our quality buy territories to continue trading with the trend. I'm going to pass it over to Jeff now. We'll see what he's got on his charts, and we'll get ready for the market to open in about 7 minutes. Thank you, guys. It's all yours, Jeff.
Thank you. Good job. Good morning, everybody. Get everything moved over here. How's everybody doing? How many were able to participate in when we had the Australian dollar yesterday? We had a nice little move to the upside. How many of you got that and stayed in it? We did yesterday was kind of a little, I guess, elongated because we were waiting for things to happen. And so we had time to draw out a few of our charts here and just kind of get an idea of, when price came into these the sell territory here, that each time it came into that range, we had more and more of the buy orders okay, or sell orders were being depleted at this point until it got to a point where there were no more sell orders, okay? So we started seeing where all of these sell tickets started becoming less and less, and then we got that breakout, okay? Now, these are really great trade opportunities, but the reason I'm pointing this out this morning is that we also have some other products, okay, like Canadian dollar basically did the same setup, okay? And it's really important that you know multiple asset classes, especially with the FX market, the futures market, and the stocks, and also options, okay? Now, options is more or less a trading strategy. We're always going to use the stock charts as a way that we navigate. So, but the correlation between them and watching the FX markets as we go through them. You should have your majors and your minors, majors and or the exotic pairs, and you start looking for the FX market to move in front of the other markets, okay? And it's kind of like a domino effect. How does the FX market impact the futures? How does the FX market affect the futures, and then the futures affect the stocks, and so on and so forth? So it's always nice to understand the multiple asset classes and also start to see those pictures on the price chart. It's where, I've come out and I've looked at the Euro USD, and it's kind of piqued my interest on a 60-minute chart. I've got that structure, okay? It's in the right place. I found a buy territory in the right place. But then when I went out to a little larger time frame, I wanted to see where I was on the whole map, okay? What was the trend? Have we reversed trend, okay? Often when we have a short-term trend and we can connect 3 points, okay? Now it takes 2 points to identify a trend, and it takes 3 points to confirm the trend, okay? So let's just put we got point 1, point 2, and then we have point 3, okay? So on a larger time frame, we have broken a confirmed downtrend. 2 points identify, point 1, point 2, identify a trend. Third point confirms the trend. When price breaks a confirmed trend, then we're looking for the bend at the end, or a reversal. Now, if the Euro USD starts to reverse, that's going to have an impact on the US dollar, okay? So using, I'm going to jump out to trading view here for a moment. And as we come and look at the US dollar, okay, as one of those lead odds enhancers, we can see that this on an hourly chart is not a bearish pattern. It's actually quite bullish, and some people might even refer to it as a bull flag, okay? So if the dollar is going to continue up, is it a good opportunity to buy the Euro USD? Not right at the moment, okay? But we do recognize where we have sellers that have come in before, and we also recognize, where we are with the US dollar as well. Now, keeping an eye on these things, as Caitlin was going through the pre-market routine, she was pointing out a lot of details. Now, I know sometimes when you're going through the pre-market routine, you're just like, man, it's the same thing over and over. News, economic reports, look at whether we're inside or outside the prior day's trading range. Now, understanding the FX market is also part of that pre-market routine, understanding where the dollar is and so on, okay? So putting all those pieces together, we have on gold. Oh, gold broke out to the upside, so let's get crude oil. Crude and gold have been looking the same, and this is kind of spinning right into this, okay? So we had gold, which was in that channel, okay? And now we know where the dead space is, right in the middle, okay? And now if price gets back into that area, we would expect it to slice right through and come down to that buy territory, okay? Now gold has just got a nice little pop to the upside, okay? And now we're looking to break. We've already broke out at this point at 1941.30 cents. Okay, we had that earlier breakout about 1938. And now we're looking to take out 3 levels of sellers, okay? So 3 levels of sellers being taken out is going to basically make that dead space a little wider, okay? Which could provide us with some bigger potential trade opportunities. You know, one of the topics that's in the polls right now is how to stay in trades longer. Well, staying in trades longer is, it's a learned skill, but it's also becoming aware of where all the dead spaces are, okay? And where we could see that we've taken out many levels of sellers or many levels of buyers. So we're getting a pretty significant move on gold at the moment, okay? And now it's approaching a breakout. But if you drop down to a smaller time frame, is it safe to take that breakout right now? Come on, is it safe to take the breakout? Great job, George. And if you choose to take the breakout, you're choosing to take elevated risk, because you have to give you a stop loss all the way back down to 1936. Okay, remember, we need that leg base group of candles before the breakout. See, all those people that just took that breakout are now sweating it out. Especially if they took a mini lot that just went from, you know, now they're down about $200-300. Okay, all right, so now we're looking for either price to base above that dead space and then come back into it, or come all the way back down to a buy territory, which would be back down about 1923. Okay, so the trade is pretty much over for this one. We would need a few more details in order to participate by following some rules and some guidelines to help us manage that risk. Okay, so let's come back out on crude oil. Okay, now, as I was talking about the FX market having an impact on the equity indexes and such, okay, how will crude oil going up have an impact on the equity indexes? If it breaks out above 105.24 or breaks below 103.52, how will crude oil, how has it been in the past few weeks, impacting the equity indexes? Yeah, inverse. Great job, Chris. Okay, so as we're monitoring crude oil at the moment, a break of 103.52 area going down to 102, okay, would have a positive impact on the equity indexes. Okay, a break above 105.24 would have a negative impact on the equity indexes. Okay, all right, how many are still in that Aussie dollar? That one's still cruising up. Okay, beautiful. Now go back out to a daily chart. Let's get back down to 60 minute. 60 minutes, so much more exciting to watch. Okay. And this is also a great looking little chart, in as much as that when you're using Fibonacci measurements, okay, is when you measure from the move up and you get these really shallow pullbacks. You know, we can call them a high tight base or just a really shallow pullback. And often you can see them pull back to about that 23.6. Okay, as long as it's a high tight base, often the implied is that market is going to continue. Okay, now we're looking for the Aussie USD to come in up here, but we still need some support from the US dollar going lower. So let's come back out and look at our equity indexes. Okay, we just had a bounce off of that Globex low. Now you may be wondering, well, why are you trading that and getting in? Well, there was no entry for me here. Okay, I mean, it was too small of a time frame that you would have to find. Okay, it's not bad. I mean, there's a leg base group of candles right there. But in order to get the 3 touches, I would have to drop down to that 1 minute chart. And we come back over here and examine that. Oh, I guess we did have it on a 1 minute chart. Caitlin, did you have that zone already plotted out? Did you get that one too? I know sometimes you get some really good detail there.
Oh, I got a Nasdaq. I was just
Oh, you got
watching
it
that
on
one.
Nasdaq? Nice. Okay, so there was a smaller time frame zone in that area. There's a couple of leg base group of candles in there. Okay, I just chose not to take that one and missed a nice little opportunity. Now, if you remember, how many saw that sell territory that Caitlin also had on her chart for Nasdaq and S&P and I think the Dow as well? Where was it? Are we approaching it? Okay. Now tie that into time. What time is it? I got to get that thing moved out of there. Okay. Oh, Nasdaq is still right in that area. We've got the stocks. Let's see if we can grab this one. I didn't have that one marked. There it is. How many see it down in here? We got another one right below it too, on these small time frames. Okay. Now, it's almost like the equity indexes are all mixed up again like they were yesterday, aren't they? Let's we'll go out and take a look at our dashboard in a moment. I just want to get let's see, 3 minute chart. Nice call, Caitlin. Great job. How many caught that one there? It went right into that zone there. And how many saw it hit that 88.6% retracement? Bam, dead nuts on. Ooh. Okay. Now we still have this area down below. I'm going to come back down to that 3 minute chart, 2 minute chart, and I'm going to look right in this range here. And see if I have another opportunity. Should price move back down there, okay? So I missed the upper one. Now we have 15,057, 15,028 would be the next one. And we have our opposing sell territory up here at 15,185, 15,199. Okay. So what needs to support that move to the upside we would need the stocks to help with that. Okay. And we're still a little bit early. Okay. So if we're early to hit into that buy territory, should we anticipate a big trend change, or should we anticipate that getting a bounce off of that? You got to let go of the mouse and so you can type. Okay. And I really wanted to get on that Russell. I was doing some other things. Now, Russell's still got a nice pocket of points to the upside to finish out. Give me just a second over here. I have to log into another account. I have a good position on the Dow futures, and the Dow futures are coming up into that 34,981 area, which is a sell territory. Okay. Now that sell territory, I want to be defensive, but is that sell territory in a dead space? Having that knowledge of where you can see that support and resistance and understanding that dead space area, I want to be defensive and look to use that information as a profit objective, okay? But I also want to be prepared that price may go right through that dead space area. Now, very often, as it tests that area, you're going to get a pullback, okay? The 34,981, we could look for a pullback, and on a smaller time frame, look to splice into that and continue to go through that dead space area. It's really important if you want to stay in trades longer is to understand that territory and that trade environment. Okay. Now go ahead.
Can I share my screen real quick?
Yeah, absolutely.
Cool. Not sure if anyone got the Dow trade, but I did have a 2-minute buy territory. So I know sometimes I go to the little bit smaller time frames, but just want to, put the pieces together of why, going back to the pre-market routine, why it's so important, identifying trend was to the upside. So we're looking for more of our long trade opportunities versus the short trades. We often see those squeezes to the upside. I'm always checking volume. We can see the 2-minute was formed on higher volume. So price dropping down into it. And then also looked at the time. I think I was looking at the S&P or the Nasdaq. Let's see, Dingo, I just missed. Yeah, that's the same thing with me. I was looking at the S&P as well. It was a fast move, but right on that quarter hour, about 12 minutes ago, where price just dropped down. So different odds enhancers. We're always talking about time of day, high volume, trading with the trend. Just want to show you guys how this is a great picture that ties everything together. George got it. Nice job, George. Are you still in it? Yeah, I was too busy looking at, I think, the S&P as well with Dingo.
Yeah, it's like we were all looking at different places and all of a sudden everything hit at the same time,
Right. All right. Just wanted to show that. Yeah. So it's good to tie, all the pieces together, different things Jeff's looking at, I'm looking at, but the more you can put together, it often has these great trade setups.
Could you go back to your charts and pull up your sell territory for your profit objectives? So for those folks that are in the trade, it's important to know where to be defensive and look to take potential profit. Okay, now these are some shorter term trade opportunities, and Caitlin called some really great entries, okay, and risk management. But part of the risk management is knowing when to take the profit, okay? So, it's getting there close, okay? And we're about 2 minutes away from a quarter hour, okay, where we often see the market change directions a little bit, but more so at the top of the hour. And I don't believe we had any economic reports coming out at 10 o'clock. But anyways, having a good profit objective, but also noticing on Caitlin's chart right there, see that 10-minute sell territory, is that just a place to be defensive or should you just exit the trade? How many see that dead space area right there? Right in between resistance and support. Okay. Now, if you're happy with the profit and you want to capture that profit, you can certainly do that. Okay. There's nothing wrong with that. But also having a place where if you're going to stay in a trade longer, what would that look like? Okay. What would you need to see to say, okay, I'm going to trade my plan. I'll adjust my stop so I don't take a loss anymore. I'm going to manage my risk accordingly. Okay. But I see this dead space area. Okay. Now, often sell territories and buy territories within that dead space can get run through, but you're always going to find a little bit of resistance there. And 3 out of 4 times, you're going to see a small pullback, often a 1-to-1 or 2-to-1. Okay. Now, do you have a sell territory on some of your other products there as well, that you pointed out?
Yeah, I'll take a look. And just another thing, just to add on to what you're saying, make sure you're listening to what Jeff's saying, because I know a lot of people often think all buy and sell territories are the same, but when we place them in certain locations, they may not be as probable. So understanding where the dead space is a great way to say, now, is this one going to be just a profit target, or am I looking to take a short here? Because it's not all going to be the same. Take a look at S&P. Where we're at on the anyone get the short trade on S&P? This one I would have passed on as well, just because it is that overnight sell territory. So again, this one, if you would have gotten a long, I don't know, Jeff, did you get a buy territory on S&P? I didn't get that one, but again, this would be more of that profit target on that one. Yeah, Chris, perhaps market as a target as opposed to sell. Exactly. Yeah, Agnes, too early. So yeah, the one that hit, is the Dow, but that one, we're looking at other things. Nice, Cindy, you got in on the short trade? Excellent. Yeah, but don't want to stay too long again. So we can see again, some of the other odds enhancers we had with some of the other setups that worked. Volume was in our favor. We saw, the 3 touches. Trading with the trend. Is this one going to be a trend trade, or is this going to be more of a counter trend, looking for a bounce type of trade? A little bit different on this one. Let's take a look at some of the other ones. And then the buy territory, I was waiting for price to come a little bit lower. Let's see, Nasdaq dropping into that buy territory. So we're holding it now. We got a bounce off of it. Initially still using it up, price coming a little bit lower. We have this 8-minute buy territory. And then this one, if we do get in long, this one's going to be more of a target as well, not necessarily a place to take a short trade. I don't think I had too much for Russell. Russell just pretty choppy. It looks like we did get the breakout. We'd want to look for our buy territory just below. Looks like we do have it towards the origin of this move up. We have leg, base, leg, and base. So right down here. And then again, I'm looking at, this is very low volume, so just a little bit more elevated risk if you're going to wait for the pullback on Russell, since it already had that breakout move to the upside. I think we're just waiting now, Jeff. You have any other sell territories you're keeping an eye on?
Nope, I just wanted to tie those in because I wanted to stress the importance. I'm kind of proudly watching Caitlin put all these trades on and call these zones. So it's I love watching her work and pointing these areas out, and everybody can do this. Okay. Caitlin does a lot of the details in her trading and putting the pictures together along with all the fundamental information. But I wanted to show that, look, every one of the zones that she has posted right there, price has changed direction. Okay. Now, it's pretty amazing as well just to see that. But, as being part of the elite trade, we can see that every picture had on, or every sell territory and buy territory had the same picture. Leg base group of candles. Okay, now Caitlin's always very strong with the trend analysis as well. So if the trend is up, she's like, okay, I'll look to go long. Okay, if the trend is down, I'm going to look to go short, and I'll use the opposing zone as profit targets. Okay, so keep tying in the information that we're sharing, but more importantly, understand the picture to the left-hand side of the chart. We don't deviate from that picture. We look to find high quality, high probability places on the price chart, and then forward looking, look for the market to change direction. Okay. Now I would like to direct you back to the NQ. Okay. And I was going to have you do that because I wanted to see where your secondary buy territory was at.
Sure. Oh, right below.
Look at that. So we got a nice bounce off of that first 4-minute buy territory. And price is still showing a little weakness. The stocks are still, the Nasdaq stocks are a little quiet. But that buy territory for the 8-minute buy territory down there is also still a valid place. Okay. Should price drop into that? Now, the perfect storm, if you guys can help me with this, is what time would we like to see price drop into that buy territory down there? The 8-minute one. There you go, Doug. Great. Okay. Now, when we look at could you go to your 8-minute chart, Caitlin?
Yeah.
So we could look at that leg base group of candles. All right, now, when we look at that leg base group of candles right there, we know that there's a picture associated with why we chose that area. Okay, now, the leg candle is simply a body where the body is greater than 50% of the range, correct? Pretty much all of you know that, okay? Now, can you see that leg candle leaving the entry line versus a leg candle inside the buy territory? Which one is bigger, the one inside or the one leaving? All right, Summer says the one leaving. Okay, so I'll put you on the spot, Summer. Should I look for a entry line entry, or should I look for more of a zone entry? Chris is saying 88.6. Could we go ahead and plot that 88.6 for a zone entry on that? We got 8 minutes for price to arrive at that area.
It's a little finicky sometimes. Hold on.
Take
There
your
we
time.
go.
There you go. Now, what is the market going to be thinking if it drops down to 15,028? Oh my gosh, the sky is falling. Okay, now we got 7 minutes for price to hit that area. 15,028. Well, let's call it 15,029. Now you all have time to, and I'm going to say act on a simulator, but I'm not recommending to buy or sell here. But is the risk manageable if you chose to take that entry? And don't feel like you're going to miss out, because we often get a small bounce off of that entry line when the leg candle leaving the entry line is bigger than the leg candle inside the zone. Okay. So I'm looking to set that one up myself. 15,028. Actually, I'm going to go with 15,029.
Yeah, and
And-
keep an eye on the stocks too. You know, as what Jeff's saying, price approaching at the 10 o'clock reversal. Let's see if we can see if any of these stocks are starting to make that turn as well, potentially start to break out to the upside. So looking for some of the similar patterns we look for on the futures, see if we start to see them on the stocks as well.
And how are our FX markets doing? Okay, I'll come back and review some of that as well. Okay, now thank you. Thank you for sharing that too. Great zones today.
Yeah.
Good job. Isn't she pretty amazing? 15-minute charts for the stocks. Okay, so I'm back up. Yeah, those are right at that tipping point, aren't they? Now, we mentioned this on the Australian dollar. Okay, let's just take Google for a moment. Doesn't matter which one. Okay. Now, a couple of things going to happen. It's going to be the rally, a base, and a drop. or it's going to be a rally, a base, and a breakout to the upside. Okay. But we have two particular areas. Okay, right here, we just see the sell territory, or sorry, where the sellers have been stepping in. Okay. And where we would anticipate in 4 minutes, where we'd anticipate some buyers to step in. Okay. So if the stocks start to drop, then that's going to be kind of a bearish sentiment, isn't it? Now, as you look at each one of the stocks, I mean, you can come out and start to see that. The other thing I would point out here, though, is if you took your Fibonacci measurements for this move up, we just saw this on the Australian dollar, okay? And we have that shallow retracement right back to the 23.6%. What is often the implied? Right? Price moves up, bases, and then we could look for continued move to the upside. Okay. Now our risk is going to be to our stop loss. Now, one important part of this is when we have that high tight base, how many times does price bounce around between that support and resistance area? What is a normal time and when does it break out? Yeah, it breaks out on the 7th time most often. Okay. So that makes this area right now pretty critical. Okay. We're right around the 10 o'clock reversal. And we have to be aware of this pocket of points right here. There's nothing in here until price gets back down to that buy territory. So we have to play defensive on this and see in the picture on the price chart. Oops, I need that one to be red. Okay. And we made a slight, well, kind of an equal low. So we could drill into this area right here where we'd anticipate where we might find the leg base group of candles. Okay. So as we're watching the stocks over here, they're going to greatly impact how the futures move. Okay. Now, 85% of the time, 85% of the time, we see a reversal about 10 o'clock. Okay. Now, with these equities right now, if we start seeing that rally and price basing and then that big drop, that would be more of a bearish signal at the top of the market. Now, having said all of this, okay, when we come back out and I look at the monthly trades out here, just as a reference, I still remember this 100% of the time, 15 out of 15 years, on the 7th of April through the 29th, the market has been bullish on the S&P 500. Okay. So am I going to change? I mean, this drop could shake the market and make them all feel much more bearish, correct? Now, if it was your market, how would you want people to be thinking when you needed to buy? You'd want them to think bearish, wouldn't you? Okay. So the next 2 days are going to be critical to look for a longer term trade that we could stay in for a period of time. Shorter term, yeah, we can grab these little moves and up and down and up and down. Okay. But on a larger time frame, we need to be paying close attention because some of these markets may start to look very weak, but in essence, they're just pulling back to where the big banks and institutions are going to step in. Okay. I mean, we have the Qs looking really weak over here. Okay. But yet it's right now, we're almost right at that 10 o'clock reversal. I didn't get my entry, but we are seeing that a high percentage of the time. okay? And it's 87% of the time that price will bounce off of that entry line 1-to-1 before it goes deeper into that buy territory, okay? Now we're expecting price to go deeper into that buy territory. And I think Caitlin had that on an 8-minute chart. Let me drop down to 8 minutes so I can get my zone really close. Okay, I had mine a little smaller, but that's okay. So it's kind of a wider range. Now we can see that leg candle is bigger. Okay, we can also see that price got a little bounce off of that. And based on using that stop line to the rally, I'm going to mark off where that 88.6% retrenchment's at. There we have right around that 29 area. I do expect this bounce to happen, but I don't expect a long trade to stay in for a period of time until price gets back down to that lower area, about that 15,029, 15,030. Okay, let's go back up to 15. All right, so on the dashboard here, wow, Dow is really in the lead. Nasdaq's going down. S&P is kind of flat. And nobody goes anywhere without little Dow. And little Dow is just making a big, big move to the upside at this point. So again, where is little Dow going? Ooh. And what time is it? Our futures overbought relative to cash at the moment. So I have 1, 2, 3, 4, 5 negative, and we also have 10 positive. So right now, the Dow futures are approximately 50 points, almost 60 points overbought relative to cash. Okay. Now, is this an area where I should be looking to take a short trade? If you take a short trade out of this dead space area, should I be just looking for a small profit? Now, I want you to pay attention to the time as well, okay? When you start observing the time, you will start to see that about 3 minutes after is when we start getting that move. You're just making an association now, okay? Now, this is a pretty big, strong move into a dead space area, and the Dow and the S&P were the laggards yesterday, where the Nasdaq really made some bigger moves. Okay, so we're right now at the 3. Okay, taking a short trade in this area would have been an elevated risk. Okay, and just knowing where that dead space area is, you potentially could stay in as the market starts to go through some of these areas. Okay, I just need to check on oh, nice. See, I got out of the Aussie USD yesterday with about $300 profit. Okay, and right now we're seeing how price moves up into this area. Now, one more thing with all of this is that we had that high tight base. How do we project where a profit target is at? When we take that same information and using Fibonacci measurements, we're looking at a 127 or 1618 extension. Okay, so my profit objective here on a high tight base is going to be 0.76680. And if it goes through that area very quickly, I'll look for 0.77041. Okay. More than likely, I'm pretty comfortable with the profit on that, grabbing my 300, 400 bucks a day and looking for that 0.76680 as that potential profit on this one. Now, using the Euro USD, are the markets going to continue to move up, which is what we need to kind of evaluate. Okay. Now, a lot of basing right down here in this buy territory. Okay. Now, on a 60-minute chart, everything is good. Nothing has been violated, but we need to see a little bit more of a move to the upside. Okay. Now, some people do not like when price bases in this area, which is our buy territory, before getting a move. Makes them feel really uncomfortable. Okay. So you can wait a little bit longer for that. And one of the ways to do that is take this Fibonacci price extension tool and just going from 0.1 to 0.2, and then coming back down to 0.3 and just using a later entry. Okay, the structure and the pattern. Oh, we just got our Nasdaq. Okay, and then we have an 85% chance of hitting target 1, 40% chance of hitting target 2. Okay. All right, let's jump back over and look at the NQ. Okay. Now I still have risk on the trade, and price could go right through this area. The stocks are starting to break down, and there was a large pocket of points right there. Okay. So if you're uncomfortable at all with what the stocks are doing over here, then simply take your small profits or a small loss and get out of the way. Okay. If you're still willing to take the risk, then place your protective stop loss where it should go and be willing to take that loss. Okay. I'm trying to catch up to it so I can get my stop in play. Okay. All right. Where are we at? Two contracts. And we're right around that 15,000. Okay. Got my stop in place. Now, what's concerning me is the stocks are getting a little more weak over here. Okay. They're shaking the tree. They just got all the breakout traders to jump in. Okay. They went to the extreme side of that buy territory. Okay. And potentially could break and go lower and stop us out. Okay. Now, following the trade plan, we do honor our stop loss. Okay. You must always honor your stop loss. Taking a look at the trend or the tick over here. Okay. We're now at that extreme area. Oh, I got stopped out. Okay. And we should also look for a potential bounce here. Okay. We're getting extremely oversold on the tick. So if you're still in, you may get a chance to get out at that break even. But right now we should start focusing on that lower buy territory. Okay. Wow, what a reversal that was. Okay. Anybody take this short off of the Dow? I know I was reluctant to do that, and that's okay. That was just my my trade plan. And I need to check that Aussie USD. Wow, that moment I looked at it, I should have just grabbed it, huh? Yeah, I'm doing a full standard lot, so I have to sit through that in a few minutes. Okay. All right, so let's what's crude oil doing? Getting that breakout to the downside. Now, isn't that bullish, or has it been bullish for the equity indexes? Helen, great question. Okay. Any place you're looking for, I mean, any place that feels good to take a profit. Yeah, a lot of newer students need to focus on taking profits. Okay. Because that's how they measure their success. Now, yes, somebody else's information said, yeah, the market should go up for until the 14th. Okay. But could you take a profit any time along that way? Would it make you feel good that you got into a trade and you took a profit and then you would go on to the next one? Okay. we must start conditioning ourselves to always manage risk, but also to take profits. Now, as I'm referring back to the poll, if you want to stay in trades longer, that's one of the poll questions. What do we look for to stay in a trade longer? How do we develop our mindset to stay in trades longer? Well, it starts off with taking small profits, managing risk, taking a small profit as you learn when to stay in trades longer. Okay, so let's just keep putting all these pieces together. Okay, it was a great question. Now, I don't mind staying in the trade longer. Okay, as long as I have information supporting that. Let's come back out to the S&P. S&P came back and took out that whole zone area. Quite the reversal. Were there some economic reports coming out, or did they come out? Ooh. Now, keep in mind, did gold show us something was happening just before the market opened? So that reaction in gold causing everybody to try to jump in and chase price as it started taking out all these sell areas here, now has started to come back. Okay. So what would we anticipate our equity indexes to do as well? We're seeing basically the same reaction. Okay. And we're seeing some of the same volatility. But how would we use gold as an odds enhancer in this case? Boy, some of these stocks are just really taking a nice little pullback. Starting to get a little bounce right now. And I don't have another buy territory until about 14,896, 14,877 on the NQ. The Dow did get the breakout. Okay, did get a nice little pullback. Stocks are not selling off as much as the futures did. Okay, so let's check cash value. We have 8 Dow stocks negative, and we have 1, 2, 3, 4, 5, 6, 7, 8 positive. And what is cash at right now? Cash equals 0, and futures are trading at 0, pretty much. Okay. So cash and futures are balanced out. Okay. Well, the Fed came out and said inflation is much too high. Okay. Well, that just means they're going to do something about it, right? I mean, the Fed's job is to tame that inflation. Oh, they're not going to do anything about it? Sorry, Ed. ES is way oversold. Okay, let's just take a look at that. We have 9 Dow stocks negative. 1, 2, 3, 4, 5, 6, 7, 8. So we should be negative 2. And we're negative 19. Cash equals negative 2. Futures are at negative 19. S&P futures are 17 points oversold relative to cash. Now, that's just a statement. That's not necessarily a trade opportunity. Okay. So as we look over to the left, I did have an area right in here. There's a smaller time frame right at that breakout area. Okay. About 4,556, 4,550. Okay. So I want to find that late base group of candles. look at the details, and could say that price may go a little deeper inside that zone as we see that leg candle, two leg candles leaving the buy territory or the buy line, okay? And those two leg candles are bigger than the one inside the area, okay? So price has gone deeper into that buy territory. Let's just see if it's met that 88.6% retrenchment. What time is it, everybody? When should we expect that reversal? Oh, how are we going to manage that risk? Is that buy territory in the best location? Was that buy territory formed on higher volume during the regular trading hours? Okay. So as we evaluate that, we'll come right back over to this area. How many got stopped out on that first trade and a little bit gun shy to jump in right now? Me too. I stopped out in front of all of you, right? So, I mean, that's a little bit more shy as well. So how else could I get into this trade if I felt that the market was going to, or if S&P futures were oversold relative to cash, okay? And I wanted to participate in this move back to the upside. Yeah, we could wait for a little bit more of a commitment or move back to the upside, couldn't we? Where is the least amount of risk going to come into play? Waiting for confirmation. I'm just going to put a little line right here where the 88.6 is at and get rid of some of the noise on the chart. Yeah, it's going to be a lot less risk if I take the trade now. But again, I want some reassurances. So I could place an order to go long at 45.56, 45.57. And if price violates that 45.50 area, then I'm just going to be looking for that buy territory back in a better location. Okay. Wow, really getting that nice little pullback. Okay, so it's violated that territory, so boom, it's off the table. And now I'm still waiting, and I have a zone inside of a zone. So I'm looking at that 45.50, 45.37, 45.35. That is that buy territory that I'm looking for. And now I'm going to have to be patient and wait for that as price may or may not come back down to that area. Okay. Crude oil didn't really do that huge sell-off. Okay. And we could see that over on the tick chart. Okay. That price fell very rapidly. Now, let's take a little look at this here as well. So I'll bring up the S&P, and I want to bring up that matrix area over here so we could see that price volume, okay, that when the volume was really light, price just kept falling through those areas. And now they're starting to accumulate again. Okay, that doesn't mean that the trade is going to be where we're going to go long again, okay, at this moment. It just means that when price fell so rapidly, there was a lack of buyers, not that there was more sellers, okay? And like over here, you can see on the crude oil, when price dropped down there were just no buyers, okay? Price just fell, and it's looking for where the buyers may be located. The internals, well, the trend is still pretty low. We got a nice sell program on the tick, and it looks like it may have exhausted itself. The advancing issues over declining issues are fairly low. But our VIX, it's moved up a little bit, but it's not showing much fear in the market, is it? Not showing much fear. Okay, you figure with a drop like that and inflation fights and things like that. So a lot of the release of the news simply means that when the news is out, they're reporting something that has already happened, not telling you what is going to happen. The old phrase, buy the rumor, sell the news, okay? In order to produce news, the event must have already happened. And then now we're getting a dissemination through free websites and free market, free information. Okay, how reliable is all the free stuff? Does it come out exactly when it's happened, or does it come out much later? Okay, so when the event is broadcasted as breaking news, okay, we need to pay attention to that. As price drops into the buy territories or rallies into sell territories, okay, we need to be on the exact opposite side. Now, that might mean that we might be waiting a little bit, okay? All right. And also another thing that I want to point out is these pocket of point areas, okay? These areas where we have strong moves up often get retraced. Also, when we have strong moves down, they often get retraced, okay? So these big areas here are not everybody selling or everybody buying. It's generally a lack of sellers and a lack of buyers at this point. Everybody was just sitting back and being fat and happy, watching prices move up. And while everybody was sitting back, nobody was buying to keep the move up going, right? So those algorithms kicked in, and when there were no more buyers, okay, the algorithms kicked in and started looking for where all the buy orders were at. And nobody was willing to buy as the markets were back at a high point. And you can come out in a little larger time frame and you can see where we're at, okay? Understand what the trend is, understand that, you know, often making a lower high than the prior high can be pretty bearish in the market, especially at a resistance area on the NQ. Breaking above that, we also need to consider that we have a sell territory just above that breakout area, okay? So we are seeing kind of a shift in the markets as we're starting to see price get volatile at a potential turning point, okay? Now, I'm just saying price is getting volatile and it's shaking the tree. Now, why would I claim it's just shaking the tree? Well, remember, what we kind of started off with was some information outside the price chart over here. We see some fundamental information that says, hey, for the last 15 years, now it may change this time, but 15 out of 15 years, the market has gone up, starting on the 7th through the 29th of April. And the markets, meaning the S&P 500, okay? Now, this is something that's been happening for 15 years, okay? This is where they run prices up into May and they say, sell in May and go away, okay? So as the market is turning bearish on the news and the media is coming out and making big news announcements and, okay, watching the war in Ukraine, looking at all the headlines, they're putting fear in the market ahead of what? Potentially a big rally, okay? Now, there's a lot of things that I've just shared with you this morning, okay? Not a lot of trading, okay? We did get stopped out on one trade, okay? Now, we managed our risk, okay? But see, on a bigger picture, we're looking for price now to come back into a buy territory so that we can participate starting around the 7th going into the 29th. So we need this dip. Okay, but we need it to be a quality area where we're going to get in and start to participate in. Okay, and those quality areas maybe are found on a little larger time frame. Okay, and we still, at every intersection, we have to learn to manage that risk. Okay, now another lead indicator as we come back out and we're looking at the Euro USD. Okay, it has broken a little bit lower. Okay, so taking that information, jumping out to a larger time frame, are we in a good location to anticipate a reversal pattern? Okay, and if we're at the end of a downtrend, or we've already broken that downtrend, and we're looking for where the buyers stepped in to stop price from going any lower. Okay, which is right around in this area here. So let's take some of this noise off the chart. We've already broken through that other area right there. Okay, and let's start looking if there's anything down below that we could use. I'm going to put those little blue dots on the chart using the Doji tool. Now this one right here has already been used. Okay, so we need to go down to the next one. And I'm going to go with that one. It's right. There's actually a larger zone in this. This is a smaller one inside the larger one. Okay. So if the euro is looking to go a little bit lower, then how would we perceive that the equity indexes are going to come out of that? How would we participate? What would we need to clear in order to stay in the trade a little longer? Okay. So price has broken this area where we've had buyers come in. Okay. Several times buyers have taken out orders in that. Now it's just broke. Okay. Our buy territory is lower, 1.8771. Okay. Should the euro drop into this area, we want to be also prepared to take the trade going long back up. And then we would associate that with how we would be looking at the equity indexes, which travel a lot in tandem with the euro. Okay. Now, all of that excitement, Caitlin had some really great sell territory zones and some really great buy territory zones. Okay. That news or that inflationary news caused the markets to react. Okay. The reaction took out a trade that we had. Okay. That doesn't mean you did anything wrong. It means you managed your risk on the trade. And it doesn't mean you should jump in and keep on going short. We know where we will go long and we know where we will look to go short. Now, taking a short in that sell territory up there would have been elevated risk and going against the trend. Now, a lot of these things that we have been describing and getting the picture on the price chart, okay, were all described before we had these big moves, correct? This forward-looking technique that we are looking at, okay, using buy territories and sell territories and trend and things, okay, we always have to manage risk because some breaking news may come out and shake up the market, okay? Now, the way that the market's dropped, do you think the Fed is going to come out and do some backpedaling here soon? It's, I didn't mean it that much. We're going to come back and save the day. Okay. Okay. Keep in mind, if the White House, if the Fed come out and say something that shakes up the market like this, okay, they also will come back in and say, no, it's safe, it's okay, you don't have to run. Yeah, puppet strings, okay? They're playing the public. Now, that doesn't mean that we're always going to know the exact right thing to do. We still always have to manage our risk and have a good, solid trading plan. Some good volatility in the markets today. So if the markets were going to continue to sell off, then the tick would be continuing to stay in the lower part of the range. So what we're just starting to witness is that there are some buyers coming into the market at this point. More buyers than there are sellers. So if price comes all the way back up, then there was a total lack of sellers, okay? And price just dropped to find the buyers. Nobody's willing to sell, so now the algorithms must kick in and find those sellers, okay? See, having a good understanding of a lot of this information can keep you from freaking out and over trading, okay? Being around a group of people to kind of walk you through this information, help you understand it when the markets are most volatile. And I know this will be a great recording for you to go back over and watch and learn all the little things that Caitlin has shared with you and I have shared with you throughout this presentation, okay? There's a lot of pieces of information that I'm not jumping in to aggressively trade. I'm kind of sitting back and saying, all right, cash and futures are balanced, okay? Price is not in a buy territory, not in a sell territory, okay? The market's had a reaction, but now they're not continuing to sell off, okay? So all of this information is helpful to understand and assess your risk management, okay? So I'm gonna start to wrap up this session. Caitlin, do you have any final things you would like to cover or go back over some of your zones?
Yeah, just for anyone who watches, after our sessions end, oftentimes our zones and buy and sell territories do hit. So just want to go over what I have set up on my chart so you can keep an eye on them after the sessions, especially, if you want to keep an eye on the stocks, the time of day as well. Just watch them after the sessions. It's not meaning to jump into a trade, but you still want to assess the market conditions since we are getting this pullback now. But, we're seeing the trends still being more to the upside on the higher time frames, just taking into consideration all these different indicators and odds enhancers. So starting with the S&P, you can see that we haven't hit our 3-minute sell territory up here, 3-minute buy territory down here. Location-wise, this buy territory is below that area where we had the 3 touches of resistance on top. Looking at 45.42. With our stop at 45.32.75. Sell territory side also did not hit that one. We're looking at 45.91.5 with our stop at 45.97.5. And again, before just jumping into these trade setups, do everything that Jeff and I have been doing throughout this entire day as far as what are the stocks doing, what time of day is, what time of day is it, what are the internals doing? If we do get a pullback, looking at the trend, is the trend starting to spike up? So we still want to keep an eye on all these different things before getting into a trade. That's going to be the S&P. Let's take a look at the Nasdaq. So Nasdaq 1 hour time frame. Let me zoom in a little bit. So we still have that 5-minute sell territory up here at the origin of this move to the downside. Just keep in mind this one was the overnight session sell territory, so a little bit lower volume, going to be a more elevated risk. Coming down to our buy territory down here at the origin of this move up, we're looking at a 6-minute time frame one at 14,895. And again, if you do want to do maybe more of a confirmation entry with the overnight one, that's going to be at 15,184.75. Jumping over to the Russell. So Russell, we're looking at a little bit lower. So this one, actually both these created on higher volume, 6-minute and the 3-minute. The upper one is going to be at 2056.2. And then the lower one just below that at the origin of that move up is going to be at 2046.7. 6-minute one is the one that I was keeping an eye on just because of high volume, strong move down, and we saw the 3 touches below that area. That one's still looking at 2125.5 with our stop at 2131.7. And then lastly, jumping over to the Dow. So this one's just a great example, you know, like if you're still struggling with when to get in, when to get out, you know, some of the topics that we've incorporated for our poll that we're doing, you know, understanding, you know, going through that process and that pre-market routine to assess where the quality buy territories are at and sell territories can help with getting, you know, some of these turning points in the markets. So I didn't get any of these just because I believe I wasn't looking at the time when price was hitting these areas. But we can see each of these as far as indicators that were stacked in our favors in these situations. Both of these were created on higher volume. So sell territory here, higher volume, buy territory here as well. And then also jumping down to the 5-minute, you can see really how price intercepting on the quarter hour or the 10 o'clock reversal is also a huge odds enhancer. So price came down into this one at 9:30 a.m. and then changed direction. And then if you notice when price rallied back up, what time did price change direction up here? And that was right on, if you notice at the bottom, it says 10 o'clock, the 10 o'clock reversal. So time of day is critical, looking at the stocks, looking at volume, all these different things that we're tying together, as well as the internals. Just keep an eye on anything before you necessarily jump into a trade, and also to build your confidence with your trade setups. Yeah, keep an eye on those throughout the day. Oftentimes we set them up, but they don't necessarily hit during our sessions. I just want to put those out there in case they do hit later in the day. The zone on S&P short hit twice. Let's see, S&P. Yeah, looks like it hit something to the left. You talking up here, Gallo? Yeah, right in here. So potential breakout, you can see over here. Maybe it'd be better. Actually, on the 5-minute, you can see how price consolidated in here. So just taking that and dragging it right across, we can see this lower sell territory. Price came up, tested it once, went a little bit deeper into that sell territory. So if we do expect the trend to continue to the upside, then this could be a potential breakout point. I just say keep an eye on this upper sell territory just above it. Maybe a little bit of a trap, and we could see a pullback before continuing to move higher. Nice call, Gallo, though. Great point here. We can see 1 touch, 2 touch, just looking for that 3rd touch and then potential breakout. Any other questions? Let's see.
Yeah, Clark pointed out that the zone was used twice. Okay. Now keep in mind, Clark, some zones are for taking profits and some for taking trades. Okay. Now there's nothing wrong with plotting those areas on your price chart, so you recognize that, oh, I'm not going to take that one. Price should go through it. It's just information. Okay. So we take trades going in the direction of the trend, but we also want to know where other people, yeah, like Caitlin's already visualizing the right side of the chart. Okay. And as she visualized, there may still be some sell tickets still left up there. Okay, and we anticipate getting a small pullback, but since that area has been used up, potentially it's going to go right through it. Okay, so not every buy territory or sell territory that we plot on a chart is where we're going to take a trade. Okay, it's information to help us navigate, and that's an important factor. You know, as Caitlin is pointing out, where all of these buy territories and sell territories on there, we have to keep in mind of what is trend, and we have to identify what is a profit area versus an area to enter and manage risk.
A lot of nuggets I think we threw at you guys today. So definitely watch the recording after and just understand, you know, what Jeff's going through, what I'm going through. A lot of information. You know, the point is really to keep you guys safe, you know, just so we're not over trading when the market conditions can be more volatile. Oftentimes it's good to just take a step back and watch what's going on and wait for those trending market conditions to come back into play. Yeah, Jeff, do you want to show Japanese yen? Did that hit?
Yeah.
Take a look at that.
All right, so I do have the Japanese yen up, and you know, based on the larger time frame, back out to the daily. Okay, we are somewhat anticipating a reversal pattern. Now, one of the biggest road signs to look for a reversal pattern is to understand a continuation pattern. Now, this is a continuation pattern. It is described as a descending triangle. Now, statistics will show you that 83% of the time after a continuation pattern comes a reversal pattern. Okay, so when we start looking at the sequence, we have reversal pattern, then we have trending pattern, then we have continuation, and then we look for the reversal again. Okay, so we're in the right area, and we want to take we want to go down to a smaller time frame and learn how to splice into that, because of the road sign says, hey, get ready for reversal. And now, if the Japanese yen is going to respect this buy territory here, okay, then what would happen to the US dollar? So if the Japanese yen drops into a buy territory, okay, while the US dollar is going into a sell territory, okay, along with the euro, okay. See, what you're starting to witness is the manufacturing and the basing of a new trend to the upside, which we have information that historically has happened. Okay, 15 out of 15 years. Okay, so what you're witnessing today may be chaotic, it may be scared, you may be gotten stopped out a couple of times. Okay, now it's time to sit back and say, okay, what is this market really doing? Is it manufacturing a turn? And if I get so involved in trading without having a trading plan, I'm going to be so emotional. When the turn happens, and we're looking for it, we're still a day and a half away from it. But when that happens, am I going to be prepared to take the trade in the opposite direction? No, I'm going to be carrying around all that fear. Okay. So as we are witnessing some volatility in the market, and some of us have referred to as it's shaking the tree to get everybody out before it starts going back up. Okay. Now, I could be totally wrong, and price wants to go back and go find more buyers at a lower area. There's certainly a lot of areas when we get out to a larger time frame, okay, and we start looking at all the buy territories down below, okay, and where we have sell territories on top. But all of this volatility, all of this stuff that's happening right now is the manufacturing of potentially a change in trend. It's making everybody become bearish. It's like playing basketball. You kind of fake left and then you go right. Okay. We have to anticipate that the banks and institutions leave their footprint, and where they have buy orders, there are some potential trade opportunities. And where they have sell orders, we have potential opportunities. Okay. So there has been so much that we've shared with you today. It has not been a really active trading environment for me at this point. I took one trade and I managed my risk and I got stopped out. Okay. The markets were falling on some news. Now, I got stopped out, but I didn't do anything wrong. And see, you have to embrace that. So many people associate a loss on a trade as it's their fault. They did something wrong. What could they have seen to make it change? And there was nothing wrong with the trade we took. Everything followed our trade plan, followed the trend. We just managed risk for this type of an event. Okay. So, wow, we've gone quite a bit over today, Caitlin. There's a lot of things that Caitlin wanted to share with you, a lot of things that I wanted to share with you. And our ultimate goal is to keep you guys safe and understanding what is happening. So you're not trying to over trade now and then miss out on what's coming for the rest of the month. Okay. Yeah, it's a tremendous experience to be witnessing and part of what Caitlin and I are doing in here and putting all these pieces together. So I'm going to get off my soapbox here and kind of look for some opportunities, but it looks like I'm going to be waiting for a little bit of time now to get this move back into a zone. Anything you'd like to final wrap up? I'm going to button up my lips here so you can wrap us up. Yeah.
Yeah, I'll keep it light. Just everyone take the poll. Make sure you submit your feedback for what you guys want to see for our 2 90-minute sessions in April. You know, we have the couple choices. You all should have gotten an email this morning, or if you follow us on Twitter, you can answer there. But let us know what you guys think. I love all the different answers you guys are giving. So we're putting everything down on paper. We're going to tally everything up. And if there are a lot of requests for certain topics that maybe we didn't include, you know, Jeff and I may discuss doing some of those in the future. So whatever you guys want to see us do for those sessions, let us know, and we'll be sure to take a note of those. And the poll ends Friday, so make sure you get your votes in by then. All right. Thank you guys, everyone. Thank you, Jeff. Stay safe today. And, you know, just wait, as you know, what Jeff said, just waiting right now for price to come to us, not necessarily jumping in, and just understanding the market conditions a little bit more volatile today.
Great job, everybody. And if you did take some trades today, just go ahead and type in the chat how much you profited on some of the zones that Caitlin posted out there. That would be great. And then we'll sign off here.
How'd you guys do? Cindy, how'd you do? Remember you said you were in the S&P trade, I think. Anyone else get in? -8, keeping it low somewhere, that's good. -325. Yeah, challenging today. So again, if we're getting those losses, sometimes the market conditions just aren't the best today. So often just taking a step back, reassessing and waiting for the market conditions to become smooth again can be a good idea. Nice job, Cindy. Up 54.25. Okay, down on Nasdaq. Up 400. Yep, anticipating lower. Nice job, 400 though. That's great. Yeah, so if you are down a little bit, you know, take a step back, as Daniel's saying, just kind of reassess. Often when this is happening, you know, it's better to wait and not necessarily over trade and jump in. I think a lot of people tend to do that and they want to trade more to make up for losses, which isn't the case. You should just wait and then get back in when the market conditions are better. All right, great job,
that's
everyone.
a wrap.
All right, we'll see you guys all tomorrow. Have a great rest of your day and stay safe out there. See you all tomorrow.
Bye now.